Hello and welcome to another update video about LINK. So Chainlink continues to be in this range. We are basically at the moment very close to support, if not in support. You can see that this range, I mean, it started in May last year, so it's been now over a year, nearly 11 months actually, that we've been in this range. And it's a so-called ABCDE triangle. That would be the bearish scenario. But in this scenario, in this bearish case, we would need to confirm that a break below 530. For me, however, a break below $6 already will be an initial indication that the breakdown to the downside is going to work out, because we're losing support then. So a move below $6 will be a move below initial support, below standard support, and that would also make it quite likely to break below the $5.30 level. And that break would most likely send us into the region between $2.90 and $3.50. However, that is not currently the primary expectation. The primary path for LINK is to take the path to the upside. First of all, we've tested this support area a few times. We are in the channel and we've just bounced off a lot of times, and also from this area here on the 10th of March the last time. And if we find support here, then the next rally should send us higher in a third wave, ideally above the upper boundary line of that channel, or of the range. Now, I count the move in the bullish count, that's the orange count. I count it as a wave 1 to the upside, and an A wave down, a B wave up, and a C wave down. Basically an expanded flat pattern, or at the moment it would actually be a running flat, because we are holding with that C wave above the A wave low. Now if we zoom in a little bit, you can see that we're currently coming down in the C wave. It's a very odd count. I mean, it's not an odd count, it's a very odd chart. Proportions are a little bit off. I mean, it could be, I don't know, it's a bit tricky to count this. Well, not to count this, but to look at it as a C wave with proper proportions. But it's a valid count, and as long as we're holding the $6 level, that's all fine, and we can turn around here. But again, that level is very, very important, because any sustained break below the 78.6 Fibonacci retracement will make it less likely that this is still a wave 2. Now, if we find support, the third wave should send us higher. It would first need to take us above the wave 1 high, what I count as wave 1 in orange, at 838, and then above the B wave high at 881, and could then take us above the 950 level. 950 is very important, because that is the important resistance here, which defines this overall trend channel. But really, since November, we've spent most of the time in the lower half of that range. Now let's talk about target for the third wave, if it works out, but it first needs to turn around. At the moment, I don't have any indication it's doing that, even though we have enough waves to the downside to do it. But yeah, target would be actually $11. 1096, the 1.618 extension would be an ideal target for that third wave. And zooming in reveals that we have enough waves down to count it as complete, but I cannot rule out one more low. Might even be that this fourth wave is still in the making. They sometimes do that, and we get one more low. But bear in mind, we broke out of the trend channel already. Okay, we broke out of the trend channel. It's just that it's not really impulsive, and we don't have the volume we need. But we broke out of the channel, and we're just retesting it. So there's a bit of a decision point here I would pay some attention to. But so far nothing too exciting here at this stage. Hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye bye.